Oliver, luxury has been a bit of a mixed bag recently. Investors seem to still like some of the high quality companies. They're less keen or perhaps more discriminating towards some of the lower quality businesses. Where does France's PPR sit in all of this?
Well, PPR at its heart is a luxury company, quite a high quality one. Its main brands are main brand is Gucci, and that's done very well. We've had numbers from PPR this morning, and it's performed well, better than most analysts were expecting, and the shares have gone up slightly on that. It's seeing growth in all markets, in Western Europe and in Asia, and various other competitors have struggled in one or other of the markets. So it's a pretty decent performance they've reported this morning.
So good for Gucci, but perhaps not so good for some other parts of the group?
Well, this is the problem with PPR as it is. It's something of a conglomerate. You've got the luxury division, of which Gucci is the biggest part. That's doing very well, and then you've got two other parts which really aren't doing quite so well. There's the sports part, which is mostly Puma. That's done very badly. They've changed the management. They've had profit warnings this year. They're losing ground to Nike and Adidas, the other big players in the sports market. And then it's got a much smaller other retail category consisting of catalogue retailers and Fnac, the French electronics and music chain. Now it's going to be spinning off Fnac to shareholders. It's selling the catalogue business and it's spinning off Fnac. So that part of the business is going, but what will be going forward is the strongly performing luxury business and the not so well performing sports and lifestyle bit, of which the biggest part is Puma.
Does that strategy really make sense? Why not go a bit further and be pure luxury?
You might well ask. Investors tend to like pure plays, and there's lots of pure play luxury companies out there for investors to buy. Prada, for example, which floated last year, the shares have done extremely well. People have really bought into its high growth, pure luxury kind of strategy. If you're buying into PPR, you're getting the luxury and all that growth, and then you're getting dragged back a bit by Puma. So as a conglomerate, it doesn't seem to make sense as it is, although the company itself is very committed to the structure.
And does it get any synergies from having Puma alongside the rest of the business? I mean,
Well, the company says that they're very similar businesses. They source things, they make materials, they make designs, they sell things through both wholesale and retail channels, which to an extent is true, but they're very different markets, very different dynamics, very different customer groups. So I don't think there can be all that much synergy between them.
So this is a company where one shake-up is coming along fairly soon, and it'll be interesting to see whether more follows in the future.